And welcome to the VSA Capital Tech and Transitional Energy Podcast on Thursday, February the 17th. Phil, how are you?
I'm very good form, Andrew. Yep, I'm fine.
Good, and I'm glad you're on good form. I'm going to be heading off to Cornwall later today for a long weekend, right into the eye of this red alert that's just come out from Storm Eunice. I could be blown miles away. But, of course, actually, I guess the windmills and everything, or the wind power, will have to stop it. It'll be too strong for the wind power, won't it?
Yes, they do. When it does get too strong, they switch them off. They curtail to avoid damage to the turbines.
I think they will have to. And again, actually, whilst we're on wind and power, I don't know if you saw the other day, there's sort of annual bids, aren't there, for the capacity prices for all these people who put gas turbine engines in a field and virtually hardly ever switch them on, but just occasionally switch them on when there's a surge in requirement. And I see that they had record capacity prices, and by record I mean absolutely huge. I mean, we don't just have an energy crisis in this country, we have an energy supply crisis as well, don't we?
We do, and the prices that went through the power capacity auction reflected that. It was saying, I was just reading I think it was on Reuters, but it was saying that the last auction for 2020 and 21 period supply was at £1 per kilowatt per year, and these have done at £75.
It's just incredible, isn't
75.
It?
Wow. Said that they procured, there's 560 megawatts was procured from demand side response providers, which is what you're talking about. This is kind of, when the frequency falls on the grid, they suddenly have to switch on. And it said that of that 560 megawatts, 411 was from coal. And also there was 385 from battery storage. So, quite interesting. Well, sort of says it all about the mix, really. I would think there was some gas in there as well, but my word, what a difference in price. Oof.
It's extraordinary. And actually, this is where, these some of these battery storage projects can actually could be making a lot more money, actually, just by playing the arbitrage. A lot of them do play the arbitrage. The Pivot Power project down at Oxford does. But, you could put almost any form of battery energy storage and make in a field at the moment in the UK, connected to the national grid, and make an awful lot of money, because it has gone a little bit crazy. I mean, whilst we're talking a little bit about that, it's quite I've just given you a weather warning for the southwest of England. I'm going to give a little bit of a warning on some of these battery energy storage funds like Gresham and Gore, because I'm sure most people have noticed that the lithium carbonate price is going through the roof at the moment. But when I say it's going through the roof, it really is going through the roof. When we started looking at lithium back in 2013, it was about $4,000 a ton. It's now $64,000 a ton. And there isn't enough lithium out there. Now, one of the problems with these lithium battery storage funds and lithium batteries is that basically every 5 to 7 years you have to replace the battery because they degrade. By the way, most of these energy funds are not allowed for a decommissioning of those batteries either, because you can't just chuck them out. You have to they're expensive to get rid of. But they'll suddenly find that the price of their batteries to replace have gone through the roof, and they really are not going to be viable. And there's going to be, I think, out of some of these energy storage funds, some rather nasty write-downs, which is going to somewhat destroy the model. So just, a bit of a warning. I don't look at them close enough to say exactly when and how much. But I would be pretty cautious if I was holding one of those funds at the moment, just having a good piece of analysis. And I think the other point, I think I mentioned this, maybe I mentioned it in the podcast, I can't remember, but, one of the reasons we have this massive issue with lithium and why the price is going through the roof is that so much lithium is being used actually for the wrong purpose. It's been put into long duration energy storage. It should just be used for EVs where it's perfect. There's plenty of other products, as we know, that can go and do long duration energy storage. And I'm not just talking vanadium. Everybody knows that I love vanadium. But there are plenty of other ways of doing long duration energy storage. I mean, hydro is the most common, but obviously you need mountains and things. But, there's compressed air, there's hydrogen, there's vanadium, there's zinc bromide, you name it. Lithium actually is the wrong product, and yet that's what everybody's using. I mean, it's crazy. But there you go. Now, just whilst on that same topic, Phil,
Yep.
we announced yesterday actually a very interesting situation with our client Infinity Energy Systems, where they're listed on AIM. We actually dual listed on the Aquis Stock Exchange. We've talked a lot about the Aquis Stock Exchange because it's a sort of modern exchange, but we dual listed on the Aquis Stock Exchange so that they could then list their warrants effectively for free alongside them, because the Aquis Exchange allows you. It says if you're an issuer, you can have as many instruments as you want listed under the same basically prospectus. So for very little capital, we were able to list them on Aquis, list the warrants, which the warrant holders are delighted about. And actually, I think we could well see quite a flood of AIM companies doing exactly the same thing, dual listing on Aquis, so that they can list warrants if they either already have them or if they don't have them, actually so that they can issue them when they next do a fundraise. So watch this space, but I think there could be quite a lot of interest. We've certainly had a lot of interesting calls from people who have read that announcement and said, wow, that's pretty innovative.
Well, that's VSA, Andrew.
Yeah, very good. And also, just again on sort of batteries and that sort of thing.
Yeah,
I noticed that this week that British Volt raised another 200 million, didn't they?
Yes, I saw that. Yeah, they did.
And Glencore contributed, I think it was 40 million pounds. So the whole sort of actually the UK is starting to get itself going in terms of building a gigafactory. We've also had some rare earth companies come to our office this week, and interesting enough, there is a lot of talk about, as well as Pensana having a process plant which they're looking to do up in the north east, possibly another process plant being designed somewhere. And we've also got Glencore talking about, lithium battery recycling plants. Slowly but surely, it would appear that the UK is actually starting to really get going in this whole part of the transitional energy chain, which is actually the building of the batteries and the process plants, etc., which are very expensive.
Did you see also, and this is from the Engineer, which of course I always read, publication actually, the Engineer at heart, that Eurocell has put the UK on the shortlist for its first European gigafactory. A £600 million investment. So we're alongside, I think, Spain and Netherlands on their shortlist. So clearly we're being seen as a destination, increasingly as a destination of choice for these things.
I mean, just so fantastic if we can become that. Love to see a bit more support from the government, but there you go. I also, though, did see from the government, I think they're putting forward 1.3 billion for helping with charging points.
Yeah, they are. Yes. Yep.
And I mean, this is this whole charging point situation. I mean, we've talked a lot about it on this podcast. Yep. We're starting to get, aren't we? We're starting to get a lot of charging points being put in at, motorway service stations or, retail parks or big supermarkets. But there's still so much that is required for the whole infrastructure and the whole way people are going to charge their cars, because it's not all about just having them at a motorway service station. One of the big questions I still think hasn't really been resolved yet is what you're going to do in terraced houses. It's great if you've got a massive country mansion with a big drive. Yeah, you can put in your own system, but for us poor investment bankers, I'll get into trouble for saying that, won't I? But if you live in a terraced house, which, let's be honest, most people in London do, and I live in a terraced house, very nice one, but it is still terraced, you can't guarantee parking your car outside your own house. And you're not supposed to run cables, are you, unless you've got sort of, I don't know, flashing lights and yellow jackets or whatever across the pavement. And so we need to resolve how we can get terraced housing charging going as well. And I'm not sure we've quite got there yet.
No, we haven't, Andrew. But I think you and I are both maybe a bit old enough to remember the major rollout of cable TV, and of course now subsequently the fibre optic networks. So there are the companies out there that do that, and that's the big telcos and know how to do it. But that's it's a long process, but there is the means.
And we have a lot of lampposts out on the street.
Yeah, we do. Yeah.
And they are starting to put charging points into them, and you can then just plug your car into the lamppost, and it shouldn't matter too much which lamppost. But again, as you say, what I find is interesting is that you've got this sort of blend at the moment between, because there are other complications obviously with all of this charging. It's not just the charge. Anyone can put a box to a certain extent down, but you've got to have the voltage, the transformers to control voltage, the amount of energy there. It's this whole sort of chain of things you've got to put in place, which is why I find it so interesting that potentially, charging connects in very much with what I describe as grid services and utility work, because you probably end up digging the roads as well. So yeah, you need to sort of factor that all in, I think, about how it's all going to work. We're not there yet. Anyway, that was me ranting on a bit, wasn't it?
But we're keeping up to speed on it for investors, and that's the main thing.
We did, and one of the companies obviously that we like within the space is Nexus Infrastructure. They had their AGM this week, said that everything's fine. So a bit of a tick in the box there, but that was it. Fine.
Yeah.
And anything you'd like to discuss, Phil?
Well, there's actually, Andrew, there are quite a few things, and I'm not shy in coming forward on these. I mean, just quickly, and reflecting on your comments about lithium and demand and battery storage, the California Public Utilities Commission has approved plans to add more than 25 gigawatts of renewables and 15 gigawatts of storage by 2032. I mean, it seems a long way, but it's 10 years away, and that's 49 billion. So it just reflects this continued direction of travel in the in the industry. So that's that. But just a wider thing. Can you remember we were discussing sort of start of the year, Andrew, about inflation, about costs, about supply recovering, and how we're going to be watching that. I don't know if you saw that Airbus have come out with results.
Very good numbers.
Yeah, indeed. And they were saying that they've seen partial recovery in air travel, which of course we all know, but higher defence and helicopter earnings. So obviously Airbus is a big manufacturer of helicopters, but also defence equipment. And so why is that important for UK investors bother about that? I mean, firstly, we've got a very big aerospace industry, and we manufacture components, parts for Airbus. But more importantly, when you're looking at companies' results and they say, whether they've got exposure to, things like automotive, medical, industrial, aerospace. So they are a leading aerospace provider, and it all feeds down through. So I thought that was quite a positive in terms of what they were saying. Also, I don't know if you saw, there's been quite a few big tech results out in the States, which again are an indicator of health in the economy and spend. And one of those is Cisco. And Cisco are one of the biggest providers of plumbing for the internet worldwide. They make routers, switches, also provide security. And a lot of this business is very much driven by cloud and cloud computing investment. And they were saying that they were seeing a very positive progress, but also shift to more software and subscription revenue. So this is like SaaS. When we're talking about SaaS software, this is what this is. But they warned, and they said that pandemic-induced supply challenges, which have added to costs, will persist. So they're seeing still supply issues there. But I also saw Applied Materials, and they make equipment that are used in silicon chip manufacturing around the globe, and their kit is just vital to making semiconductors, and they had results as well. They said that the supply environment remains challenging, so they're seeing no great change there, but they said that they're already close to being sold out for the year, with a positive growth outlook for 2023. So very, very positive from them. And again, they're a reflection of global chip demand and strength in global chip demand, because if the end demand is there, the manufacturers are buying equipment from Applied Materials. So we want to watch closely. And then on e-commerce, Andrew, I don't know if you saw Shopify also had results as well. And Shopify are used by just several hundreds of thousands of e-commerce companies around the world to develop their e-commerce websites, to link into payments and to link into logistics. And it's one that we watch very closely because, of course, we've got a company, Samarkand Group, in the sector. And they said that they'd seen a slowing pace in first half growth, indicating that the e-commerce boom seen in the pandemic is cooling as retailers shift back to bricks and mortar stores from online. Well, there's logic in that as people are coming back. But what does cooling mean in the case of Shopify? It said that they expect revenue growth in 2022 to be lower than the 57% recorded in 2021. So, everything is relative in in the e-commerce business. So I thought that was quite interesting.
I mean, we are going back to normal, whatever the new normal is at the moment, of a post-pandemic, should we say? I think it'd be fair to say that the UK is pretty much, it looks like the end of this month, all restrictions will basically be dropped off. The need for pre-flight testing with places like France is now being dropped, so you can all go skiing without having to do loads of tests. It does feel like we're getting back to normal, although it is the new normal, should we say. There's going to be some big changes, and we do, of course, still have this very strong geopolitical situation, should we say, West versus East, which is really is throwing up some problems. This Ukraine situation and the China situation.
Yeah.
It's funny. I've been talking to some people this week, maybe a bit of a red herring, but it's not really. It's very interesting, I think. And that is just, I was explaining to a lot of people how tied in German growth was actually to the Chinese growth and the stable Russian position. And people were like, look at me going, are you off your rocker, Andrew? But actually what people forget is, and it was shown up in, I can't remember, it was this week, there was a joint venture between VW and a Chinese group, WAN, I think it was, or something.
Uh-huh.
But the Chinese automotive industry, if you go out to Shanghai, and obviously I used to go a lot, every other bloody car is German. And actually, a lot of that German growth over the last 30 years simply mirrored the Chinese growth because Germany is so linked to China in terms of a lot of their heavy engineering. And of course, they were able to do it off the back of cheap energy prices to a certain extent coming out of Russia. But it's the first bit that's important. And, now that China is clearly closing up to the West, and the Chinese growth is probably going to slow as well, and they're obviously trying to get more domestic product rather than foreign product. Although, is it foreign or domestic when you actually manufacture it in the country, but it's a German brand? I think it will actually slow the growth of Germany, and I'm not sure many people have really put that connection together. So just anybody who's, you may or may not agree with me, do message me if you don't. But be aware, if you've got with some of those German, engineering companies, they could see quite a sharp downturn because of the situation with China.
Did you know also, Andrew, that China has been one of the biggest importers of machine tools? So these are the milling and grinding tools that you use, for making engines and for shaping, the structure of the actual engine itself. And they're a huge importer, and of course, one of the biggest exporters of machine tools and measurement instrumentation is Germany.
Yeah, I mean that's
so
what I'm saying.
Yeah,
the two have been very much hand in hand. A lot of this German miracle, or whatever you want to call it, has taken place over the last 30 years. It was simply tied in with the Chinese miracle. Actually, I mean, a lot of people don't understand. Germany was heavily involved with China, and there are certain cities in China that are very German orientated.
Yeah, no, that's good to point that out.
Anyway, let's do another one.
There we go.
So changing a little bit, IP Group announced this week, actually a couple of interesting things that I caught my eye on IP Group. But First Light Fusion got funded.
I saw that, yeah.
That's an IP Group stock, isn't it? So that's obviously going well. And the other one that I caught my eye, I think IP Group put some money into that. They didn't put any money, though, into Bramble Energy, but Hydrogen One did. And Bramble Energy is an IP Group stock. Bramble Energy, in my view, is one of the most exciting fuel cell companies in the UK. We tend to just talk ITM, Ceres, and AFC because they're listed.
Yeah,
I've often said on this podcast, fuel cells have been around for 60 years. There's actually not a huge amount of IP in a lot of these fuel cells. Bramble Energy, I think, is a really interesting one. Has got some interesting stuff. It's obviously not public, it's part of the IP Group portfolio, but do have a look at it. It's getting support from people, and I think we're going to hear more and more about that one.
Yeah, I was reading about that, saying that you use it. Well, I'd love to find out more about this now. It's saying that they're using printed circuit board technology at the heart of its fuel cells. Because I mean, PCBs is a global industry. I mean, every bit of electronics has chips sat in the PCB. So yeah, no, that was fascinating one. That.
And actually, whilst we're talking, these IT conglomerates, our client Frontier IP, one of the smaller ones, but also early stage, they sold some more Excentia shares, didn't they?
Yeah, Excientia, that's right. It's listed on this Nasdaq. It's that's AI for drug discovery. Now, Excientia was spin out of Dundee University originally. I think where Frontier got involved with it. And there's an investment from the global farmers and major funds, and a very successful Nasdaq IPO. And they've been able to exit a bit more of their equity in that. That was good news.
Yep. So that was good. That's probably all for me. I think on preying on my mind this week. It is half-term week, so it's sort of been pretty quiet. Hopefully, if anybody listening's on half-term, hopefully you're enjoying it. Your kids aren't driving insane. What about you, Phil? You got anything else you want to just wrap up with?
Well, we might as well just quickly wrap up on brands, because we do tech trends and brands, Andrew, and two of the biggest global brand companies have been reporting. That's Nestle.
Yeah, they had good figures this morning, didn't they?
Reckitt and Benckiser.
They were a bit boring, I thought.
Well, yes, beauty is in the eye of the beholder there. But they make some interesting comments about inflation, I thought, because this is something that we are watching very closely for our listeners. And Nestle said that this was just out on Reuters today, and they are sticking with price increases to help support their margins. And their CEO said that it's safe to assume input cost increases for 22 will be higher than 21, and they're trying to reflect that in their pricing and pass that on to consumers. And so, they're expecting to be able to hold their profit margins at around 17% this year. So a couple of things for investors in that is, if you have companies you're invested in, we're in an inflationary environment, is trying to understand their ability to pass on cost increases to their customers. Very important in this kind of environment. And Nestle are saying, they've been doing that. Reckitt and Benckiser, meanwhile, which is 4100 Reckitt and Benckiser, Andrew. They have said that they've seen, very interesting, this for S Ventures, one of our client companies, they've seen stronger sales this year amid strong demand for health and cleaning products, and SV is healthy foods, but bit of more of a sort of structural trend there. And again, it is raising prices to offset costs of raw materials and other costs in the currently inflationary environment. So there we go.
Well, I may say it's a little bit boring, but I mean, stock Reckitt is actually up 300p today, which is just over 5%. So clearly the market was relieved that they weren't clobbered. I mean, inflation is a real problem. It's going to come to a head in sort of April time, particularly when national insurance comes through as well, and various changes in VAT. I mean, I was listening on Wake Up to Money Radio 5 this morning about the poor fish and chip shops, where their vegetable oil prices have virtually doubled. Their fish prices have virtually doubled. They've got extra VAT coming on. They're having to pay the staff more. They're having to pay the staff extra national insurance. And he was basically just saying, look, if we double the price of your fish and chips, though, which is what our costs are doing, we just think the customers will stop buying. So what do we do other than close the shop? And I'm not sure we can solve that with technology. I mean, it's a pretty basic principle, but if that's what the costs are doing, that's what the consumer's going to have to pay, but the consumer ain't going to pay that. So it's not looking good for the old fish and chippy down the high street.
Well, I like my fish and chips, and you're heading down to Cornwall, so you should be able to get some nice ones down there.
I won't be going out to sea this weekend.
Well, all I can say is I hope you can get you need to mount a sail on the top of your car. You'll get down there double quick.
Yeah, well, unfortunately, there's a lot of speed limits on the M4 and M5.
Yeah.
I mean, you can't do it quick. It's impossible. Anyway, people aren't listening to this podcast for my trips to Cornwall. We'll call it a day there because, as I say, it has been half term. It's been quite quiet. But hopefully that was useful. Do send us any messages. Anyone wants to talk to us, like I always say, any comments. We love to hear them. And we'll be back next week.
We will. Chat then, Andrew.